While the Gulf stock markets were destined for a significant decline once trade got back on track as the Iran war escalated. However, Saudi shares have risen despite the turmoil surprising many as domestic investors have come to its rescue. Iran's missiles and drones have hit targets all over the region, and traffic through the Strait of Hormuz has almost come to a halt. And still, Riyadh's Tadawul All Share Index is now 1.7% higher than it was before the war began 2 weeks ago. Saudi stock market has swung from being one of the region's laggards before the war to an outperformer. Domestic investors have flipped from sending capital abroad to supporting stocks, but a long-term trend of rising foreign ownership in Saudi stocks has paused. In contrast, the Dubai Financial Market Index fell by about 17% since the start of the Iran war. While domestic investors in UAE have boosted their stock purchases, the result has been less strong in the stock market. UAE citizens bought 2.2 billion dirhams, that's about $611 million worth of stocks in the first 13 days of March. However, the UAE market is likely to experience outflows because there are more foreign investors than in Saudi Arabia. Naresh Bilandani, head of equity research for the region at the Jefferies, said reopening of the Strait of Hormuz is key for regional supply chain normalization and to concurrently offer support to the equity investor sentiment on UAE.